What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see a continuation of the next leg lower after we did get that bearish breakdown from the consolidation trading range with yesterday's price action. The question now is, where will this next leg lower take us and what should we be expecting over the next couple of weeks? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. First, I want to start with some words of encouragement. In the stock market, you should be expecting lower highs and lower lows until the bulls prove it. Remember that we are in a bear market in a lot of areas of the stock market, and the S&P 500 could be very close to entering a bear market as well. So there is no reason you should be expecting higher highs and higher lows until the price action proves it. So if you're trying to be bullish in this market, you can still do so. You just need to be responsible and you need to only be buying at very strong support levels and make sure you're taking hints from price action. If you remember on SPY, I said that we need to start getting risk off if we break down below the trading range, below 408 and our 20 simple moving average. So with yesterday's price action, we sliced through both of those support levels with one swift movement. So that was instantly your price action indication that if you were holding long positions that you need to start getting risk off, and that would have really saved you a lot of damage and a lot of harm with today's price action. So every day I give you these critical levels and all you have to do is follow the price action at these levels. And I am going to do exactly that for you today. So the definition of following price action is not having any guesses or any biases in your trading. Make the price action prove everything to you. And if you're trading in the direction of the trend, you are more often than not going to have a higher probability chance of winning. So this is still a downtrend until it's not, and we need to get higher highs and higher lows until we break this downtrend. So you should be expecting lower highs and lower lows, and you should be expecting every rally to fail until the bulls prove it to us. So now I want to get into the topic of where will this next leg lower go? And of course, nobody knows for sure, but I do have some very important things that I want you to pay attention to. And that is going to be the possibility that we actually don't make a brand new low and we get some type of double bottom. In this scenario, SPY is already at the low, which is going to be this previous low where we did have two closes right around 389. And you can see today that we do have the third close at this level. I strongly believe in closing price action, and even though we do have wicks above and below this level, we have now 3 daily closes at this critical support, so that is something you do not want to ignore. The other obvious elephant in the room is that we have a giant gap above which doesn't fill until SPY gets all the way back up to 401. But we still need to be very cautious while we're trading below SPY 394 of more downside. So right now, the number one thing you need to be watching for will be a breakdown below 389, because if we start breaking down below 389, we are more than likely going to come back down to retest this low, which was right around 381. And if we break down below 381, you're looking for that next leg lower at 376 and 370. Yes, we can go lower than those levels, but I don't want to get into lower price targets until we see how price action behaves, because those will be very strong support levels that we're not very likely going to slice right through. So watch these very critical support levels, and yes, you should be expecting lower prices until we see some type of strong bounce that cultivates higher highs and higher lows in the price action. So you're only getting more bullish if we start seeing SPY breaking above 394 and holding above that level as support. We cannot simply break above that level and then slice right back down through it. Otherwise, you're still looking for that next leg lower. So we already know we should be risk off below the 20 simple moving average. So that means you want to be risk on if we break back above the 20 simple moving average. So you're not getting more bullish in the short term until SPY breaks all the way back above 403 and then 408. As I continue to tell you, there are bears at every single resistance level when you're in a strong downtrend. So the bears have the advantage of the strong trend. So if you're a bull, you need to be very clever about your entries and you need to be using very good risk management. And even if you're a bear, you still cannot throw all caution to the wind and have no risk management. As you've seen many times in this market, we still get these face-ripping counter trend rallies, and we could get another one before you know it. So you need to watch every single support level as a possibility that we get a strong bounce from that level. So what that means is do not be getting overly bearish at SPY 389. If we start to break down through that level, you have a quick trip down to 385 and then another critical support at that level that you will need to be paying attention to. And then below 385, you have the same exact thing you need to watch at 381. So treat it day by day and price action move by price action move. and it's a lot easier if you hammer down to the smaller time frames and watch these moves on something like a 1-hour chart, knowing these are your critical levels to be watching for price action reversals or the price action to break down through these levels. So try not to get overly bearish at support, because it is possible we come back up here and fill this gap and possibly even get the bullish breakout off of a double bottom. That is exactly what we saw back on March 14th when everybody was expecting a brand new low, and we just got this double bottom bounce off of 416 and had a very impulsive rally. So you cannot completely rule out the possibility that we get some type of double bottom, but if we do break down through that support, then you're expecting that next leg lower, and you have very clear levels to pay attention to. So remember that it's a downtrend until it's not, so you just need to get comfortable seeing lower highs and lower lows until we see some type of bullish reversal. On the NASDAQ 100 triple Qs, we were down 3.53%, and again we broke down through another critical support level at 293, which means we are more than likely going to retest the previous support right around 285, and you still need to be on the lookout for the possibility of that double bottom look. Below 285, you have very clearly defined levels for your next leg lower at 276.8 and 269.5. And if we break back above 293, it is very likely that we're going to fill that gap at 299, and we can start getting more bullish if we break back above 300. So back above 300, we can start to get a little bit more risk on, but we still have to watch for that critical resistance around 306, 315, and 318. Again, downtrend until it's not, so try not to go against the trend unless you're at strong support and you're managing your risk very closely. And pay attention to these Bollinger Bands, because right now there is not a lot more downside before we get to support. In the Dow Jones, we were down 2.67%, and we did gap down below the previous gap, so we do have some type of island reversal look, which is obviously very bearish and not something the bulls want to be seeing. So price action clearly gapped down and closed at the low of the day, which is an extremely bearish candle, but there is this huge gap to fill above at 323, so you cannot completely rule out the possibility of a gap fill before we go any lower. Below 316, you're looking for the possibility of a retest of the lows at 310 and 308, and below 308, you have that next price target down here at 297. You can get more bullish if we start breaking back above about 325 to 326, with strong resistance above 326 up here right around 333. So there's still a ton of resistance that the bulls continue to have to battle against, and that is why the bears have all the advantage. This is lower highs and lower lows until the bulls start making higher highs and higher lows, and you cannot completely rule out the possibility of that double bottom. So don't get overly bearish as the Dow Jones comes down into this support zone right around 312 to 310. On the Russell 2000 IWM ETF, we were down 2.71%, closing below all of our critical support, which was in the low 180s, which means we're very likely coming down to retest the previous low at 175. That should be a strong support zone, but if we do lose that level, you're looking for the gap close at 165.7. So get a lot more bearish in IWM if we break down below 175, and look for price action reversal as a bull at that level for a possibility to come back up to close the gap at 184. Above 184, we'll be getting a lot more bullish, but we don't have the bullish breakout until we get back above about 187, and then the bullish breakout of confirmation is the close above 191.5. On the ARKK ETF, we were down 7.15%, coming all the way back down to the support level at $40, and I continue to tell you this is a very strong bear market, and this is not an ETF you want to be getting bullish on until we get multiple closes above 52. So you can see a very clear rejection from resistance at 47, and we're currently sitting right back on top of support at $40. But the thing about the ARKK ETF that you have to understand is that the Bollinger Bands have squeezed very tightly, so there is not a lot more downside left. We could still come back down to retest the low at $39, but eventually we'll be getting far too oversold below the Bollinger Band, and we'll need those to expand. So there is going to be the possibility in the short term that we bounce off of $40 to close the gap at 43, but that is still going to be a resistance level that you need to respect. Don't get bullish until we get all the way above 52 and not any sooner than that. On the VIX, we were up 6.37% as the VIX continues to spike off of that support zone at $24, so we still need to be very cautious of more volatility, and you're more than likely not going to get the double bottom if the VIX spikes above 30, which will likely send SPY into the bear market if we see the VIX spiking above 30. Now, there is a slight bullish indication in the VIX is that we do have a very large wick to the upside, and you can see the VIX has been putting in lower highs, and we continue to see the VIX getting crushed as it tries to break out above 30. So that could be evidence that this was just a very volatile buyer strike pullback and that we could get that double bottom sooner rather than later. Look for confirmation in the VIX of getting bullish on the close below 24 and then we should have plenty of lower highs and lower lows to confirm that the VIX is in a downtrend and trending back down towards 20. No matter how you spin it, the market is volatile while the VIX is above 20, and volatility does work in both directions, so you need to be very cautious with the VIX this elevated. In Bitcoin, we're currently down 3.11%, and we are at the risk of Bitcoin getting that double top look if the price action closes below this neckline right around $29,000. Below $29,000, we should have the confirmed double top, which means we're coming all the way back down to 27,500. And if we break down below that support, you're looking for a retest of the low at 25,000. You're not getting bullish unless we break above 32,000. And right now the price action is telling us that we still have more downside to go before we find more buyers. On Nvidia stock, we were down 5.95% as Nvidia closes back down below that critical support at 179, which means that it could be coming back down to retest the low at 161 or making that next leg lower at 150. We have a gap to fill to the upside right around 180.5, so look for that possibility if you do get a bounce, but you're not getting bullish until we break back above 179. Above 179, we could retest resistance at 200, and we're getting a lot more bullish above 210, but right now we need to respect the fact that the price action is telling us we're going lower until we get back above 179. On Tesla stock, we were down 3.12%, and Tesla did squeak out a close below that support at 700, and we are still in this bear trend. Below 700, it's likely we're going for that next leg lower at 620 or 571. But we can get a lot more bullish if we start closing above 763 to 775. Above that, we'll likely retest resistance at the 50 EMA, which is right at 808, or the previous resistance zones at 828 and 900. So this is clearly a downtrend, so do not be getting bullish on Tesla until we can break out and form a higher high and get back above some of this resistance. And then we could start to say that we have higher highs and higher lows, and the bulls are starting to develop a trend. On Apple stock, we were down 3.86%, and Apple came all the way back down to that support zone at 137. And if we lose this support, you're looking for a brand new low down here at 130, even though there is the possibility we will have support right around 134. We have a gap to fill to the upside if we bounce off this support up here at 142.5, but we are bearish as long as we're below 144, and we're not getting bullish until we get that confirmation of the breakout above 150. This is very clearly a downtrend, and we do have this valid price target down here at 130, and that could be the bottom in Apple stock once we get there, unless we do get some type of double bottom off of 137, which we won't know until we get the confirmation of the breakout above 150. On the financial sector, we were down 3.61% as we come back down to retest the lows, and we have a huge gap to the upside to fill right around 33.8. We're below all the moving averages, and we're still making lower highs and lower lows, so you're not getting bullish until we get all the way back above the 50 EMA. On the industrials, we were down 2.95% with the price action below all the moving averages yet again, and it's very clearly looking like that false breakout look above the 50 EMA, so do not get bullish unless we can get some type of double bottom and breakout back over that 50 EMA. On the healthcare sector, we were down 1.61%, coming back down to retest the previous lows. So if we break down from here, it will be brand new lows, and we will be going down for that next leg lower. So try not to get bullish in the healthcare sector unless we break back above the 20 simple moving average or the 50 EMA. On the energy sector, we were down 1.7% as we're coming back down to retest support at this 20 simple moving average and possibly to fill the gap. So we do have a little bit more downside before we're at strong support. Overall, we're still in a bull trend, and we could still be going higher once we see if we get a successful retest of support. So jumping back over to the S&P 500, remember that this is a downtrend until it's not, so you should be continuing to expect lower highs and lower lows until the bulls prove it to us, which won't come until we see the price action. We need to see higher highs and higher lows, and we need to see some confirmation that the bulls are gaining momentum, and right now we just continue to see rejected rallies, which are more than likely just bear market relief rallies, which is exactly how you should be treating them. Remember, the definition of following price action is making the price action prove everything, and make sure you know your critical levels and know exactly what you're going to do to trade around those critical levels, which means you need a solid trade plan. Have patience, be disciplined, and always use proper risk management. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.